it all starts with this primary thesis of currency crisis on the horizon, the big fiat currencies finally failing and having to be replaced with something else. So we just want to be on the right side of the currency reset when it comes. And gold and silver are a big part of that thesis. I think that it's possible that a well-run government handles this kind of thing in a way that maybe isn't crazy painful for most people. You've got people talking about gold now in the Trump administration, which is very new. Well, they're also talking about auditing the Fed and Fort Knox and everything. So these are the actions of people who understand money and who want their money to be sound. So they're really reassuring.
Recently, soaring gold prices and calls for a Fort Knox audit have increased scrutiny of national reserves, placing gold back at the center of strategic economic discussions. With growing concerns over market instability and the declining purchasing power of fiat currencies, investors are reallocating their portfolios toward hard assets like gold. Investment in gold reached a 4-year high in 2024, totaling 1,180 tons, a 25% increase from the previous year. Notably, gold-backed exchange-traded funds saw their first year without significant outflows since 2020, reflecting renewed investor confidence. In this video, seasoned expert John Rubino emphasizes that the U.S. is dangerously over-leveraged, making a monetary reset inevitable. Historically, every major monetary reset has led to a massive wealth transfer. Those in power, governments, central banks, and elite investors, position themselves ahead of the shift, ensuring they come out on top. Those who fail to prepare, particularly those holding dollar-denominated assets, often suffer devastating losses. For thousands of years, gold has been the foundation of financial stability, and it is now being placed back at the center of global finance. Gold should be a key part of your strategy if you want to protect your purchasing power. Reflecting on the market, Rubino underlines growing discussions on gold within the Trump administration, including audits of the Fed and Fort Knox and proposals for 50-year gold-backed bonds. Debate over the transparency of U.S. gold reserves has never been timelier. The Fort Knox audit controversy centers around reported holdings of 147.3 million ounces, equating to roughly $435 billion at today's market value. With the last comprehensive audit dating back to the Eisenhower era in 1953, skeptics and supporters alike have called for a modern reassessment of these storied reserves. Noting potential obstacles, Rubino warns of false flags or assassination attempts. However, Rubino reiterates his belief that a financial crisis is inevitable that will ultimately send gold soaring. Now we present the clips of John Rubino's insights from their recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
The thing that is the most pleasant surprise for me so far is that they're actually talking about cutting defense. And Trump just floated with Russia and China, hey, why don't we cut our defense budgets in half, all of us, And then Pete Hegseth, the Secretary of Defense, just flat out said that there are big cuts coming in the Defense Department. So that's one of the things that didn't look possible for cuts. The defense budget has been kind of sacrosanct for such a long time. But, if you could take a third out of defense, then all of a sudden you're talking real enough money that it will make a dent in the deficit. Now, having said all that, I think the damage is really done as far as avoiding a currency crisis. We still have to go through the whole, the interest on our debts is bankrupting us and we're going to have to do some kind of a currency reset. All of that has to happen still. But that's survivable. The stuff that we were looking at even 6 months ago was existential. We were blundering into World War III with a nuclear power. Which makes all the finance stuff completely irrelevant. We start shooting at Russians and somebody sets off an ICBM and civilization as we know it is over. But that's not looking as likely now. It looks like we're going to be able to settle, even if it's not on terms that makes the blob happy, we're going to be able to settle a lot of the geopolitical stuff out there. And so that's a very big deal. And it because it dwarfs a financial crisis in terms of danger, that if we take that off the table, the coming currency reset seems like a totally survivable thing. We're back to our talks, Dunnigan, yours and mine, being about an investment thesis instead of about survival. currency crisis right, it's actually a good thing for you as an individual investor. So we're back to that intellectual challenge. How exactly do we play the coming currency crisis? And, I think that it's possible that a well-run government handles this kind of thing in a way that maybe isn't crazy painful for most people. You've got people talking about gold now in the Trump administration, which is very new. Well, they're also talking about auditing the Fed and Fort Knox and everything. So these are the actions of people who understand money and who want their money to be sound. So they're really reassuring. So it's completely, and they're also talking about 50-year gold-backed bonds, which I think are kind of a stupid idea from an investor standpoint, because you're still trusting the government for 50 years to give you the gold that is backing the bond. But at least it shows that they understand that linking a currency to gold improves the quality of the currency. So this is all really reassuring stuff. There's no guarantee that we make any more progress beyond what we've made right now. But, between Kennedy at Health and Human Services and Doge with Elon Musk, and the other people in the cabinet, I think there's a chance of a lot of good things happening in the different cabinet departments too. So, I worry about the deep state striking back. And I think that it's highly likely that they strike back in very serious ways, up to and including false flag attacks and assassination attempts and things like that. So, it's possible that this is so much messier than it even seems like it is now. And it seems pretty messy right now. But survive the false flag attacks and the assassination attempts, and there's a lot of good to be done out there. And there are people in place who seem to understand what it is they're trying to do. So I'm pleasantly surprised and cautiously optimistic, but I'm still a gold bug. We still got the crisis that makes gold go through the roof out there waiting to happen.
The U.S. debt has now surpassed $36 trillion. And over $20 trillion of that debt is set to mature in the next decade. A massive portion will come due in just 4 years, forcing the U.S. to pay it off or roll it over into new debt at much higher interest rates. This translates into trillions more in annual interest payments than the existing trillion-dollar debt financing. In the interview, John Rubino asserts that a monetary reset is unavoidable due to unsustainable debt levels across government, corporate, and consumer sectors. He explains that lowering interest rates to manage debt would reignite inflation, prompting investors to shift into gold. Central banks have been buying gold at a record pace in the past year, moving away from U.S. treasuries and diversifying their reserves. But what's even more shocking is that gold is also flowing into the United States in unprecedented quantities. Currently, the U.S. government values its gold at $42.22 per ounce, a price completely disconnected from the real-world market value of nearly $3,000 per ounce. If gold were revalued to $3,000 per ounce, it would improve the U.S. balance sheet by roughly $800 billion. However, given the magnitude of the debt crisis, many believe that the revaluation would need to be much higher, perhaps $10,000, $50,000, or even $138,000 per ounce to eliminate the national debt entirely. Let's get back to the interview.
There's no way to avoid a monetary reset of some sort, just because the numbers don't work anymore. I mean, we have an immense amount of debt, and it's not just federal government debt. It's consumer debt, corporate debt, derivatives. Everywhere you look, we're dangerously over-leveraged and therefore incredibly financially fragile. So there's a crisis out there that breaks the system just because the numbers are so outrageous. I mean, debt or interest on the government's debt is like $1.5 trillion a year, and that has to be borrowed, which makes the next year's deficit even higher and raises interest costs even more. And the only way to combat that in the short run is to cut interest rates dramatically. In other words, massively easy money to allow the government to borrow without having ruinous interest costs. But then that causes inflation. We saw in 2022 what it's like to increase the money supply by 30 or 40%, and then see our grocery bills go up by the same amount, right? And if we did that again, people front run at this time because they know it's possible. Back in 2022, it had been such a long time since there was legitimate inflation, painful inflation. And then we had that happen, and now everybody remembers it, or they're still suffering from it, actually, because our living costs didn't go down. They went up by a third or a half or whatever. And then they just stayed up there, So a lot of people are having trouble getting by because of what happened in 2022. So if we try to deal with massively increasing government debt and spiking interest on that debt by cutting interest rates dramatically, which is what Trump wants to do, by the way. As a real estate guy, he wants lower interest rates, and he's willing to publicly order the Fed to do that. If we do that, then you get a resurgence of inflation, which, by the way, hasn't gone away. The last inflation readings that we've had are like 3.5%, going on 4%, which is way above the Fed's normal target range. So if we spike inflation again, everybody's going to immediately start buying real stuff. So we'll buy, obviously, gold and silver. I mean, gold and silver is the beneficiary of every big trend that's out there right now. So people will call you up and buy a bunch of gold and silver coins, probably mostly silver at today's prices. And they'll start looking for energy stocks like ExxonMobil and Oxy Petroleum and Enbridge, the gas pipeline company. And then maybe they'll buy uranium stocks, or maybe they'll buy really good quality real estate like rental houses and stuff like that. They'll just plunge into real stuff and away from financial stuff. And that brings about the currency crisis, because the ultimate financial thing is the dollar. If nobody wants to own government bonds, it's because they think the dollar is losing value at an accelerating rate. And there we are, and once that starts, where do you go? If you've cut interest rates and aggressively eased in order to stop government interest expense from going up and allow the government to borrow more, you can never raise interest rates again, because that immediately spikes government's interest costs on the bigger amount of debt that they borrowed because you cut interest rates to allow them to borrow more, So we're in that place now, which is kind of a death spiral. And, let's say Trump and Kennedy and Elon Musk cut the deficit back to $1 trillion a year from $2 trillion a year. That would be phenomenal. That's Winston Churchill level fiscal success. But it still won't save us, because we're adding $1 trillion a year to an already unmanageable amount of debt. So it still breaks. And so there's our investment thesis, assume the currency is the victim of the next crisis and invest in things that go up if the currency goes down in value. And, that's a pretty straightforward investment thesis, but there's an awful lot of moving parts to it too. Because do you want, uranium stocks because we're going back to nuclear power, or do you want oil because we're going to slow down the transition to electric cars, if not stop it altogether? These are things we have to think about to decide how to invest for what's coming. But
gold's accelerating rise is more than just a trend. It's a fundamental shift in how investors protect their wealth. As economic uncertainty grows, owning physical gold outside the banking system is not just smart, it's essential. If central banks and elite investors are actively moving towards gold, what steps should everyday individuals take to protect their wealth in the face of an inevitable currency reset? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.